Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Daybreak Asia podcast. I'm Doug Krisner. You can join Brian Curtis and myself for the stories making news and moving markets in the APAC region. You can subscribe to the show anywhere you get your podcast and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.
And joining us now is Jennifer Welch, Bloomberg Economics Chief Geo-Economics Analyst, for a look at her big piece on what the U.S. presidential election means for China. So, Jennifer, thanks very much for joining us here. It's something of a parlor game out here for us and who China would like to see most, or who do they fear most. And it seems like from this piece, it's kind of a lose-lose situation for China. Explain.
That's right. And thank you so much for having me. I think that's a tough game. That's a tough bet to make, given that both of the most likely candidates in November's election, current President Biden, former President Trump, when you look at their records on China and also what they are planning to do if given more time in office, it suggests they're both pretty tough on China in very similar ways. We saw, obviously, under former President Trump, he launched a trade war against China. He's promising, if he's given a second term, to expand that trade war, intensify it further with higher tariffs on China. And we saw President Biden, when he came into office, retain those tariffs from President Trump. There's discussion now, reports that he may seek to expand them in certain areas like EVs and clean energy products. And he's also taken a number of measures targeting China's access to things like advanced semiconductors. So I think from Beijing's perspective, it certainly is a challenging, election for them that no matter what, they're likely to face sustained U.S. pressure regardless of who wins. If
we can put the partisanship aside for the moment, I would really appreciate your critique of the effectiveness of these strategies. On one hand, former President Trump saying he would actually raise the level of tariffs by 60% on all Chinese imports. What would the impact be on the economy? And compare and contrast that with the Biden administration kind of targeted export controls. And I'm wondering whether or not there would be more value. Let's imagine a world where foreign direct investment into China from the U.S. becomes more scrutinized by the U.S. Administration. Could you just kind of address those 2 points?
Sure thing. So on the first question of what would happen if former President Trump followed through on his pledge to increase tariffs to 60%, we modeled this, and according to our estimates, it would reduce U.S. imports of Chinese goods almost entirely to nearly zero. And that's affecting, going off of just what he said, pretty much all sectors in which the United States is importing anything from China. The impact that could have is pretty wide-ranging, in part because it depends on how much of that trade could shift to other countries. Mexico, Southeast Asia, the EU, India might pick up some of the slack, but then the rest of it would either have to be a remaining gap or would have to shift to production in the U.S. And particularly for U.S. companies that are dependent on any intermediate goods coming from China, that could lead to higher prices for U.S. consumers. They could be paying more for their goods. If you're looking at, what President Biden is proposing in terms of a more targeted increase in tariffs, that's specifically aimed at things like EVs, at older generation semiconductors, goods where the administration might be concerned that China is able to produce them cheaper and essentially dump them into the U.S. market in ways that are going to disadvantage U.S. producers. So would likewise potentially result in U.S. consumers not having access to those cheaper goods, but the intent is to protect U.S. companies from competition with Chinese companies that receive massive subsidies.
I'm interested what you heard from people you talked to on this piece about the following. It's apparent that Donald Trump seems to have a better relationship with autocratic regimes than, say, Joe Biden does. And so, once you get away from just the mathematics of the tariffs, what about the general approach of the two men towards a country like China, which is a one-party state?
It's interesting when you listen to former President Trump talk even publicly about China, it is somewhat of two minds. Even in talking about the 60% tariffs, I think he prefaced that by saying that he doesn't have any personal problems or grievances against China. what he has a problem with is the trade practices and the impact that has on the U.S. economy. And I think that's a really good descriptor of his approach to rivals like China, where he has taken a very tough and firm approach. And, in addition to the trade war, which is, I think, what attracted so much attention during his tenure, if you look at his last year in office, there was this surge of financial sanctions, trade blacklists, executive orders, all targeting China. And that was when some major steps happened, like declaring China's human rights practices in Xinjiang a genocide, closing China's consulate in Houston, Texas. So by all means, a very tough and firm approach to China, but at the same time, the rhetoric can bounce between very, very tough and very, very firm, and then things that seem to be a little bit more complimentary of China. And I think that's just sort of the duality of the former president.
Two different worlds when it comes to the issue of climate change, and we know that the Biden administration has pretty aggressive plans. Is it possible for the U.S. to execute on its goals of reducing carbon emissions without embracing what China has to offer in terms of manufacturing, whether you're talking about wind or solar?
I think that's the key debate that has happened in the U.S. policy community. And it's happened in part not just over this concern about, for example, Chinese EVs and clean energy products, but it actually started earlier on in the administration when there was a concern about how do they reconcile concerns about human rights practices in Xinjiang and use of forced labor with things like solar panels, which China produces a great amount of. I think the way in which President Biden would frame it is that it is possible to do both of these things. And the path that he sees towards that is through bringing manufacturing back to the United States, which has other economic benefits, and working with allies and partners to stand up other supply chains. Of course, the devil is in the details in terms of how that's implemented and the efficiency of industrial policy in getting you to that point. But I think that's the means through which he is attempting to square that circle. All
right, Jennifer, we'll leave it there. Thanks so much. Jennifer Welch, Bloomberg Economics, Chief Geo-Economics Analyst. And the big take of the day in the Trump-Biden 2024 rematch, the only sure loser is China.
We've got Deanna Mousina with us, Doug. You want to introduce her?
No, you can. I mean, Deanna is Deputy Chief Economist at AMP Australia. She joins us from Sydney. Deanna, thank you so much for being with us. Hope.
Thank you for having me on.
Yeah, you're doing well. I know that Australia was up and running. Everybody else in the neighborhood was on holiday yesterday, so you were at the office, I'm sure, crunching numbers on the inflation story that we've been tracking very closely. Here in the U.S., we're waiting for the CPI data Tuesday morning. How effective do you think central banks have been in bringing down inflation to the point where, we really don't need to worry about it the way we were a year ago?
Well, yesterday I was enjoying highlights from the Super Bowl, actually, and looking at all those pictures of Taylor and Travis, actually. And funnily enough, today, Taylor's coming to Australia in 2 weeks' time, and they actually announced some more tickets. I'm going to be desperately trying to get those today. But anyways, on to more interesting things like inflation. I think central banks have actually done a very good job in bringing down inflation without causing too much pain on the economy. It's what economists are calling immaculate disinflation. But we don't want to get too excited that there's no damage being done, because history tells us that there are usually some consequences from very severe tightening cycles. So I think that while we have had pretty good outcomes in the past 6 to 12 months in terms of reducing inflation, and we do think there is more downside to inflation based on some of the leading indicators of prices that we look at, I think that there could be some more impacts from higher interest rates around the world. So I think we need to be mindful that growth this year is still likely to be pretty low because of that.
It's a little tricky in Australia at the moment because you have business conditions easing. We've reported that data this morning. Confidence is not particularly strong, but inflation is sticky, and the RBA is kind of holding on to a kind of tighter profile. What's that going to mean for the economy going forward if you have confidence down, inflation up, and a tight central bank?
Well, in Australia, we lagged the rest of the world in terms of the upturn in inflation. So we are also lagging the rest of the world on the way down. So we do have higher CPI numbers compared to countries like the US, Eurozone, New Zealand. And the parts of inflation that still worry the Reserve Bank are things like rents, construction costs, or just generally the cost of building new homes, things like insurance and finance, some household services. So there are sticky parts to inflation, but the overall story around inflation is still quite positive in Australia as well, because we've seen pretty large declines in prices for a lot of discretionary related spending, goods inflation. Very clearly, interest rates are working to slow down consumer spending. And actually in Australia, we have much lower growth than in countries like the US, and the consumer has responded much quicker compared to the US because consumers are much more leveraged here, and also because of the way our housing market is structured. More people take out variable or short-term mortgage loans, unlike the US. So the pockets of that sticky inflation, or the concern that the Reserve Bank has, is really only in some parts. We are still seeing that the breadth of high CPI rises has come down a lot in Australia. And I think in the next 6 months, we're going to see inflation come back in within the RBA's target band.
Australia's big trading partner is obviously China. Different story there when it comes to inflation. It's non-existent. I mean, we're talking about deflation. Is this a precarious position right now that China finds itself in?
Yeah, for China, it's a big problem because we know from history that countries that have deflation suffer big problems in terms of the impact to corporate revenue, household purchasing power, and generally confidence. In some ways, deflation can be worse than hyperinflation because with hyperinflation, there are normally more policy tools that you can use to combat that. It is a big negative for China, and I guess another negative risk for the economy there. I think that growth this year in China will be about 4%, which is pretty poor, but that's probably enough to keep that demand for commodities from Australia enough for our trade balance.
Can I just go back to something you said earlier, and some people will kill me for this, but what is the cultural phenomenon that is Taylor Swift?
To some extent, I think that maybe it's just everyone getting on the bandwagon, because I know many people that are, I'm not really a Swiftie, but have just decided that, her concert looks amazing and there's so much press around it. You kind of just get swept up in the hype that it is. I think it's more just the media hyping her up and everyone getting a bit of FOMO that they can't attend.
Yeah, but definitely there's an economic impact. Do you have a guess on what that impact could be when she visits Australia?
We tried to look at these numbers. There's a joke in economics that if you don't know what the impact of something is going to be, just say it's going to be 0.3 percentage points, because it doesn't seem too high, it doesn't seem too low. So I'm going to say 0.3 percentage points.
All right.
Yeah, well,
go ahead, Brian.
The reason I raised it, Doug, was she had mentioned that she was going to desperately try to get tickets. So I thought, it was fair enough game. Anyway, Deanna, thanks so much for joining us. Deanna Mousina, Deputy Chief Economist at AMP Australia. This is Bloomberg. Time to check in with Bloomberg Opinion. We're joined by opinion columnist Gearoid Reidy, who's writing about two superstars, Taylor Swift and Lionel Messi, and their recent Japan visit there on the same night, and what that means for the country compared to other places like Hong Kong. It seems like from reading the piece that while there are some challenges, Japan is back.
That's right. That, just coincidentally, that basically was the theme of an op-ed in the Washington Post as well today by the U.S. ambassador to Japan, Rahm Emanuel. As I speak, as you mentioned on the markets update there, the Nikkei is nearly back at 38,000, closing in on its all-time high. And then we had, in stark contrast to Hong Kong, we had the sight of two of the biggest stars in the world, Messi and Taylor Swift, on stage or on the pitch at exactly the same time. It's an interesting moment to be here.
So are we speaking to you from the Japanese capital? Are you in Tokyo?
That's right, yes.
So anecdotally, what does it feel like? I mean, give me a sense of the vibe there, if I can use that term.
I mean, it's interesting because it's not exactly, it's not necessarily a sort of like bubbly moment, but after the years of COVID and the pandemic, and when the borders were closed, compared to that, There's so much life in the city. There's so many tourists, particularly in Tokyo. The tourist levels are something like 30% higher than they were in 2019, which, before the pandemic hit, was the highest they previously were. Economically, things are going pretty well. The wage negotiations are going on here at the moment. A lot of places are seeing wages increase. There is a small but manageable amount of inflation, which stands in contrast to the years of deflation that we had before. So it's an interesting moment. I don't think anyone's getting carried away at the moment, and obviously there are sort of significant challenges as well, as you mentioned.
If we talk about Tokyo, I want to kind of get you to contrast. Is it a great city or a great international city? I mean, you point out that there are a lot of great things about Japan generally, that the public transport is excellent. You don't need a car. Healthcare is cheap. You can get plain and affordable housing. And yet, Japan is an enigma. There's not much English spoken. And you wonder how much of an embracing of foreigners there is. There's a kind of shunning of immigration.
Well, that is I think the stereotype of Japan. If you look at the figures, there has been a huge increase in the number of foreign workers here in the last decade, not just in Tokyo, but in the country in general. I think that figure passed 2 million in data that was released last week. And that's just workers. That doesn't include, students and spouses and people like that. It is a very different city to Hong Kong or Singapore, places like that, where English is more, is one of the spoken languages. But a lot of those barriers, aren't the barriers that they used to be, with, online translation, with apps that can help you figure out where to go, and that will sort of bridge that communication gap. And I think a lot of people are coming to Japan and they're seeing that maybe for the first time. There's definitely a lot of people I sense who are coming here for the first time. Maybe they saved up over COVID because they always wanted to come here, and they arrive here and they're like, whoa, things actually work pretty well here. In terms of like the public transport and healthcare and stuff that you mentioned.
I'm wondering if a weak currency has been benefiting the situation to the extent where if you are an official within, let's say, the Ministry of Finance or even at the BOJ, whether you'd be very careful about changing, the structure of that relationship with other major currencies.
Yeah, I mean, obviously it is, either way it goes, it's a double-edged sword. It is very promising for tourism at the moment. On the flip side, it makes it very difficult for people who are getting paid in yen to travel abroad. And you see that in, the number of Japanese going abroad as well, below pre-COVID levels. The number of people who even have a passport has declined quite a lot. So that is, there are obviously benefits and downsides to that as well. In terms of, the direction of the yen, I think that is all going to be based on, essentially BOJ and Fed policy over the next couple of months. So I'm not sure there's much really that anyone in the Ministry of Finance could even do, even if they wanted to.
Every time I go there, I enjoy it, and so don't get me wrong about some of the angles that we took there. But you have to say, I think for most people who've been there for a long time, and perhaps you're in that category, that it's not as inclusive as it could be. What's the biggest challenge for Japan at the moment? I've been here 20 years, and obviously you've seen, or I've seen, things change. I mean, I think one of the biggest issues is that the pace of change is definitely different to what people expect. And I wouldn't be surprised to see, we have this, very excited stock market at the moment. I wouldn't be surprised to see that go the way of the previous, the previous ones a couple of decades ago, where people sort of lose interest and they look elsewhere. But you're scaring me there with that. Anyway, Gearoid, thanks so much for joining us. Bloomberg Opinion Columnist Gearoid Reidy. This is Bloomberg.
This has been the Bloomberg Daybreak Asia podcast, bringing you the stories making news and moving markets in the Asia Pacific. Visit the Bloomberg Podcast channel on YouTube to get more episodes of this and other shows from Bloomberg. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.